Welcome to Trade Pro. Here I have for you a simple rules-based strategy that will give you an edge in the market. Now, I'll cover the indicators, I'll talk about the exact rules for the strategy, and then I'll test it 100 times in a row, show you the results of that 100 test, and then you can see what type of edge it can give you. Don't forget that you can always change some of the rules and add additional factors to improve results if you wish. Now, first, just before getting into things, don't forget to hit the like button, comment down below for the YouTube algorithm, subscribe if you haven't, and check out my Patreon page. Link in the description along with other affiliates. Now, let's talk about the strategy, starting with the indicators being used here. First indicator is just a basic stochastic RSI with default settings 3, 3, 14, and 14. And then we have the 200 period exponential moving average and also an ATR based stop loss indicator. So I'll show you which one I'm using. And it's called ATR stop loss indicator, and the author is Edgar_Tran_TR. I have changed the settings on this ATR stop loss indicator, so I'll show you those. ATR length set to 14, multiplier set to 2, and I just changed the style a little, just the colors. So those are the indicators. Now let's talk about the rules for this strategy and then get into the 100 tests in just a little bit. So I'm calling this strategy the Stochastic RSI double peak strategy. It's a trend following strategy. So what that means is you trade with the trend direction as determined by the 200 period exponential moving average in white. So if price is over the 200 period exponential moving average, only looking for a long position. If price is below the 200 EMA, only looking for a short position. So let's go over two of the trades here that are for long entries, and then two trades that are short entries so you can see exactly what the strategy is. So why is it called the double peak stochastic RSI strategy? Well, what we need to see are two crosses, and we'll be entering on the second cross, but there does need to be a specific way that this happens. So for instance, right here, we see stochastic RSI comes down, and we do see that it does touch into the oversold territory. So that's one condition. We need to see a touchdown into the oversold territory and then a cross up. Now that's not going to be the entry. The entry will be the next cross up, but only as long as the stochastic RSI does not come back above the 50 line in between the two crosses. Okay, so we see this come back down, crosses back down, then it crosses up again right here. Now that is going to be the entry. That's the second peak that we're seeing, and it's also coming down into the oversold territory. So that is going to be the entry, which is why the entry is taken right here. And you can see stop loss goes to the stop loss indicator. And then I'm going to be targeting 1 times the risk. So just a 1-to-1 risk to reward ratio for this 100 backtested trades. Now, it doesn't mean that you can't mess around and try out different risk to reward ratios. Doesn't mean you can't move the stop loss to break even at a certain point, take partial profits, and change up the trade management aspect of this strategy. I'm just using a very simple strategy just for this 100 backtest. Doesn't mean you can't improve it, and I'm sure you can. So we see again on this double peak, so stochastic RSI comes back over the 50, so we can look for another potential entry. We see it come back below the 20 level, so into the oversold territory. It crosses up, so that's our first cross up, then it crosses back down, and then we see it cross back up, and it did not go above the 50 in between those two crosses. So that's going to be another entry right here on this second stochastic RSI cross to the upside. So it's the double peaks that we're looking for. Doesn't have to make a higher low. So this is not a divergent strategy. It's just a double cross on the stochastic RSI. So you can see the entry on this candle where the cross up happens here on the stochastic RSI, and stop loss goes to the stop loss indicator and targeting 1 times the risk, or using a 1-to-1 risk to reward ratio. And again, just for this test, I'm using a 1-to-1 just to show a simple version of the strategy. Doesn't mean you can greatly improve that the strategy. Just by changing the trade management or risk to reward ratio, you can do a lot with a strategy. So that is the condition needed for a long entry. We can take a look at one more over here. So we see that stochastic RSI comes down into the oversold territory. We get a cross up right here. Then we get another cross back down, and then another cross back up right here. And in between those two crosses, we did not see stochastic RSI come up above the 50. So it's a valid entry right here on this candle. Stop loss goes to the stop loss indicator, targeting a 1 times risk profit target. And that one is also good to go. So let's take a look at a couple short entries, and then I'll get into the 100 back-tested trades. Here is a short entry. So this one, we can see that the stochastic RSI, it comes up into the overbought territory, and then we see it cross back down, cross back up, and then cross down again. So it's that second cross down that we're looking for. So up here, we get the second cross down here with the stochastic RSI not returning below the 50 level in between the two crosses, and that gives us our entry on this candle right here. The stop loss goes to the stop loss indicator and targeting 1 times the risk once again. And so that one is successful. Let's take a look at another short position. All right, so a couple more short entries here. We can see stochastic RSI comes into the overbought territory. We get the first cross down and then crosses up, and then we get the second cross down for that second peak. The stochastic RSI never goes below the 50 in between those two peaks, so that is a valid short entry right here. Of course, stop loss to the stop loss indicator, targeting 1 times the risk. And then we have another one right here. So stochastic RSI, again, comes back over to the overbought territory, crosses down, then we see it cross back up and then cross back down again. So we have that entry on this candle right here. And of course, the stochastic RSI never goes below the 50 level in between these two peaks. So that's why it's called the stochastic RSI double peak strategy. Now let's get into the 100 back tests, and I'll cover all the results at the end. All right, results are in after the 100 back-tested trades. This was done on Bitcoin against the US dollar on a 1-hour time frame using a 1-to-1 risk-to-reward ratio. It took about 8 months of price data to find the 100 back-tested trades, and the results were 59 winning trades and 41 losing trades. So 59% win rate, meaning this, based on this specific test, gives an edge in the market. Now, that doesn't mean it's going to always give an edge or that it will give an edge on other time frames or other currency pairs, but based on this test, gives a really nice edge in the market. Now, most losses in a row, 4. Most wins in a row, 7. The gain on the account, 18%, risking 1% of the account equity per trade, and also not compounding. So this one doing pretty well, and I'll pop it on over to the strategy ranking spreadsheet to see how it stacks up. All right, so here it is on the strategy ranking spreadsheet, falling at spot number 68 out of 87 strategies tested. So it is pretty low on the strategy, which is kind of to be expected using a 1-to-1 risk to reward ratio. You can take a look at a couple others here that also had 1-to-1 risk to reward ratios, and they had about the same result as far as win rate goes. Every set of price data, you're going to see some variation with that win rate. So these being at 62 and this one being at 59, I'd say they're pretty much the same as if you tested these ones on a different set of price data. It's very likely you could see it drop down to 59%, just like if you tested this one on a different set of price data, you could see it go up to 62%. So just the difference there is very small. But anyway, with this one, it's so simple, and just I wanted it to be purely rules-based and completely not subjective, so very rigid. And this one with some better trade management, a better risk to reward ratio, could potentially have some much better results. So that's worth noting. But anyway, that's going to wrap it up for this one. And thank you guys for watching. Again, don't forget to like the video, comment down below for the YouTube algorithm, check out my links, Patreon page, all that, and subscribe if you haven't. But anyway, thank you and have a great day.